What is going on, guys? Welcome to another market update. So first things first, I wanted to let you know that in order to avoid repeating the same info as on the Quantonomy channel, I will be focusing more on other indicators and data on this channel, while Quantonomy will focus more on the power law side of things. Now let's get straight to the charts. This is beautiful, guys. The most ideal scenario mentioned in my last video on Quantonomy played out to the T. In other words, Bitcoin held its low 90k support, then created what I suspected to be a bull flag in our Telegram group. By the way, join our group by clicking on the link in the description if you haven't, and then had a strong breakout to higher highs. Then, once again, Bitcoin started forming a pattern designed to demoralize the bears, with relentless higher highs and lows. Now, we finally had our first proper correction, and really only have one key resistance area to pay attention to, the all-time high at 110k or so. Now to the DXY. As you can see, this is a pretty useful comparison showing the inverse correlation between BTC and DXY. As you can see here, we had a top and Bitcoin was very low, even though it wasn't the exact bottom of that cycle. But then when DXY bottomed, that was pretty much the top of the Bitcoin bull market. Same story here. When DXY topped, Bitcoin was still pretty low down here before this parabola started. Same case over here, and this one actually caught the Bitcoin bottom to the T. Now the interesting thing to note here is that these tops are typically a little bit less accurate actually than the bottoms. The bottoms are more likely to actually line up with Bitcoin's top. Even though they're pretty accurate, they just are a little bit delayed usually. For example, technically Bitcoin's bottom was down here, while the DXY top happened a little bit later at the double bottom. And same story over here. The top was a little bit further back. Now, what this tells us is that the next DXY bottom will most likely also give us a very accurate Bitcoin top signal. So if we manage to break down from this level over here to these levels, this would correlate and line up with these past DXY bottoms, while Bitcoin, of course, will continue to rally for a little bit higher. And right now we can start seeing this divergence really building up. Bitcoin is rallying massively while DXY is struggling and potentially finding some resistance over here. Ideally, we want this to turn into a dead cat bounce so we can roll over and come back lower, back to these levels as I mentioned. Now let's talk about the federal funds rate. This is actually a very important topic to talk about. Why? Because we sure as hell don't want to have a recession while we're expecting a Bitcoin mania phase. So, as you can see, in the previous cycles, whenever the Fed was cutting rates, that's when we actually had a recession. And right now, where are we? We're in a similar point in the cycle. So what do we want out of this situation? Of course, nobody wishes for a recession. That's horrible. People will lose their livelihoods. It's absolutely catastrophic to the economy. We don't want that. But if it does have to happen, it's better if it happens toward the tail end of the cutting cycle. Like in this example over here, right? It took a little bit of time before it started. Actually, this over here is a better example. We had the COVID recession here toward the end of the cut cycle. Sometimes recessions happen right away when the Fed starts cutting rates, right? These are some examples of past recessions. All these red lines indicate the durations of the past recessions over here. So we have the Great Financial Crisis, we have the dot-com bubble, the Gulf War, and Volcker double dip, and the oil embargo, and guns and butter recession. We have all of the recessions over here. So we want this potential recession here to be as delayed as possible, because this will give us the time for Bitcoin to go toward that 200k top while the federal funds rate is still being cut. So it's not unrealistic to expect this, by the way, because if you draw a projection, something like this, the next decision will be on June 18th or so. Maybe they will cut some more rates, maybe not. But if it looks something like this, as you can see, it could line up with Bitcoin's top toward the end of the year. if we get these red bars over here, it could look something like this, right? So let's hope for this scenario. Now, when it comes to the unemployment rate, we want the exact opposite, because when the unemployment rate goes above 5%, that's typically when we have a recession. We have the same setup over here. The red bars indicate the previous recessions, and typically when we have these massive spikes in unemployment, that's when we have a recession. So what have we been doing here in the past years? We've been building this bottom over here, and we want to stay close to these lower levels for as long as possible, because otherwise, if we start spiking here sooner, that could cut the Bitcoin cycle short as well. Let's hope that doesn't happen. Right now, it's completely possible. If we continue rising slowly over here, then it's possible to cross this area here toward the end of the year, right? It's possible to do something like this. And this would still allow us, if we're going to have a recession, for it to line up with Bitcoin's top and bear market as well, right? Now, let's look at some news. First up, we have a follow-up story to the op return drama. Apparently, Bitcoin Core is actually planning to go through with this unwanted update. Bitcoin Core plans to remove the op return limit, sparking debate over data transparency versus potential network abuse. Core contributor Greg Sanders argues that lifting the cap will lead to a cleaner UTXO set and more consistent behavior. Critics, including developer Luke Dashir, warned that change could lead to increased spam and a shift from Bitcoin's financial focus. Samson Mao shares my exact opinion and comparison I've shared with you before. This may come as a surprise to some, but Bitcoiners will always reject coercive changes. It was true when the corporations and miners wanted to increase the arbitrary block size, and it's true now as Bitcoin Core devs decide to remove the arbitrary op return limit. So, fortunately, there's a way to fight changes that lack public consensus like this. Bitcoin Core does not own Bitcoin. They're not the masters of Bitcoin. Instead, they've been trusted to represent public consensus, and they have now failed at that task, in my opinion. Running your own node with something like Bitcoin Knots, which has been gaining a lot of steam lately, is a great way to make your voice heard loud and clear. Next, we have another state enacting a crypto reserve bill. This time, it's Arizona. Arizona has become the second US state to pass a Bitcoin reserve bill into law, following in New Hampshire's footsteps earlier this week. Arizona Governor Katie Hobbs signed the House Bill 2749 into law on Wednesday, allowing the establishment of a crypto reserve. The bill, sponsored by Representative Jeff Weninger, establishes a reserve fund for unclaimed virtual assets that could be tapped for future use pending legislative approval, according to a statement released by Weninger's office. It also allows qualified custodians to stake the reserve assets for rewards or airdrops. Essentially, it enables the integration of crypto assets into Arizona's unclaimed property framework. Things are happening pretty fast, guys. This is a massive signal that Bitcoin is moving from the fringes to the core of public policy. For our final piece of news today, we have companies like Coinbase and MicroStrategy being included in the S&P. According to Crypto Rover, Coinbase surged 5% following the announcement of its inclusion in the S&P 500 index. This move signals Wall Street's increasing appetite for crypto-related equities, potentially driving further institutional inflows into both crypto and blockchain stocks. The S&P 500 listing also brings enhanced visibility and credibility to the crypto sector, which could support broader market sentiment and increase demand for digital asset exposure among traditional investors. So, MicroStrategy could join Coinbase's rank soon, because it's big enough to be included in the S&P 500 now. You guys want to take any bets on its spot in the S&P in like 20 years? It's going to be pretty funny when Bitcoin is going to dominate the S&P in addition to the rest of the financial system. Now let's look at the Crypto Fear and Greed Index. We're still at pretty elevated levels over here at 70 or so, but it's actually pretty normal. At least we're at a much better spot compared to back over here when we were hitting the 90s. And it's actually very normal for Bitcoin to stay at relatively elevated levels in bull markets for long periods of time, while only having very small dips to lower levels. And the recent dip here was absolutely massive, as you can see. It was like a bear market bottom in its fear intensity. So we have a pretty nice recovery right now, and let's hope we stay at relatively reasonable levels as we continue to push higher eventually. Now let's look at the Google Trends. Do we have any changes here? Not really when you're zooming out at least. We're still at very low levels. If we zoom in a little bit over here, let's look at the past 12 months. You can see that we're increasing ever so slightly over here, while the price has moved up a lot. So this is a pretty good sign. People are still unaware of what's going to happen. Now let's look at gold versus Bitcoin. As you can see, there's quite a bit of correlation here. We even had a similar double top over here when Bitcoin had a double top. And over the past few years, we've been having a massive rally in both assets. Of course, Bitcoin trades at a huge multiple compared to gold. And right now, we can see that Bitcoin is really starting to pull ahead while gold is correcting a little bit more over here. Now let's look at S&P compared to Bitcoin. As you can see, Bitcoin is continuing to outperform, even though the S&P is starting to catch up now finally. But we're still nowhere near the highs, while Bitcoin is very close to the highs over here. Let's hope that Bitcoin continues to be a leading indicator over here. Back to Bitcoin. Right now, Bitcoin is finally having a bit of a correction over here, but everything is looking very promising in the macro picture. We have key moving averages on the daily time frame continuing to cross and roll back to the upside. Things are looking even more bullish in the weekly charts, with the fourth consecutive candle above the 20-week moving average. Now we're well above even this very bullish short-term moving average, indicating the conviction of the move. If Bitcoin wanted to, it would have a lot of room to correct there while still remaining above all this cleared resistance, which would now act as support. Right now, we already have some nice demand wicks indicating buyer interest, even after such a massive rally. When looking at the CME chart, we can see that we left a pretty hefty gap here, and I was asked some questions about this. While I was very confident about this CME gap here filling relatively soon, which turned out to be true, I'm not as confident about this one over here. It is entirely possible that it will fill soon, because price tends to get attracted to these quite often. But at the same time, we have already explored this price zone a lot, which is different from the scenario over here, where we had a massive move through a low liquidity zone. It is also more common for Bitcoin to leave these gaps behind in the mania phases of bull markets, only to fill them later on in the bear market, the bottom of which will likely be well below that level. Let's see if it happens soon, but I would still give it a less than 50% chance of happening in the short term. Overall, this pattern I showed you guys here in the video on our Quantonomy channel played out beautifully. Even this candle turned out to be a trap and a copy of this one here, as suspected. So let's hope this move here is what comes next. Even if we continue correcting here for a little bit longer, this level will still be blown through very soon. That is of course my opinion and not financial advice, so do with it as you wish. We're still right on target for our moon projection of this cycle. Showing it on a non-log chart makes it look quite impressive, doesn't it? This is Saverio speaking, and as always, thanks for watching.